Now, I am going to show you how to use this indicator. I'm using VIX 75 as an example on 1 hour time frame. Okay. Now, there are two ways to use this indicator. The second one is the best way, and I'm going to be teaching you. Okay. I'm going to be showing you how to use it. I'm not going to hide anything from you. Now, the first way is to use the indicator directly. It means that when the indicator gives you signal to sell, like in this case, you sell, when it gives you signal to buy, you buy. That's the first way of using it. But it has some challenges. Let's look at some example. Look at this case. Now it gave you signal to sell, but price pushed to the upside. That means this is going to be a loss. Look at it here. It gave you a signal to buy. Price drops the downside. This is going to be a loss. You understand that? So the first way is not the best way, but it is also profitable. Look at it here. It gave you signal to sell and price dropped to the downside. Okay. And for some people, they might want to add another indicator to make it extremely accurate anytime they see a signal. Okay. You might want to add another indicator that might give them another signal. Maybe after this one shows, they will wait for that second one to give a signal that is in the direction of this first signal, and then they go in. You get what I'm trying to say? But if you want to use it the second way, you need to learn something, and I'm going to teach you. So let me quickly show you now. The second way, like I said, is the best way. You need to understand what is called structure break and market shift. Now let's look at example here. Let's say price is bullish and price is pushing to the upside. All right, forming higher high and higher low. All right, this is an example of a bullish trend. Okay, now price is not going to continue like this forever. At some point we are going to expect that price is going to drop to the downside, and instead of price pushing to the upside, let's say price comes and take out this low and push up here, right? This low that is being taken out signifies, is an indication that the market is interested in changing its direction from this bullish movement to a bearish movement. So when this low was broken, we will now begin to anticipate a sell. That means price come up, break this low, come to the upside, break this low. All right. Okay, do you get that now? Do you get that? So now what happened is that this low that was broken is now a change of character, or our market shift. All right, is an indication that okay, price wants to drop, or this is what is called structure. Okay, now what you have to do is to apply what I just taught you now to this, okay, to this indicator. What does that mean? That means anytime you have a signal like this, all you have to do is to wait for a structure break. Okay, now let me quickly show you how to apply it. Okay, uh, let's look for where we have the signal. Okay, uh, okay, good. So this is where we have the signal. I want it visible. That's why I am increasing the length of the chart, or I'm zooming. Okay, so good. So now when this signal happens, all right, we are not going to go in, right? We are going to wait for a correction. That means price should push to the upside. Look at what we have here. Look at what we have here. All right, we have here is our high. This is low. This is high, right? This is low. This is high. Here is high, and this is low. And here is where we have a change of character. Can you see it? Here is where we have a change of character. Can you see that? This is where we have that change of character. Do you get it? Just like what I showed you here. What happened? Price started dropping to the downside. Okay, so now when this indicator gives you signal to sell, you are not going to sell immediately. You are going to wait for a change of character, and before you have a change of character, price has to go up. You understand? So that means when you have a signal to sell, you are going to wait for price to first go up, and when price is going up, you are going to identify the structure as this is low, this is high, this is low, this is high, this is low, this is high, this is low, this is high. And when price break this low, when this low fails to hold and this candle breaks it and close below it, now you know that price is going to continue to sell. And what do? You go in for a sell here. You go in after this candle, sell here, you go in for a sell. Can you see that? And then your stop loss will be above this candle, above that candle there. Okay, and then you can do 1:3. All right, you do 1:3 and then you wait for price to go up again. All right, that means you will continue to sell until when you see another signal for buy. Okay, you wait for price to go up. This is high, low, high, low. Okay, was this low broken? Let me see if this low was broken. Was it broken? Yes, this low was broken. What do? You sell, right? You sell. Where is it? You sell at this point. Okay, you sell. I'm used to trading view, and then you can put your stop loss above here, right? Then you do 1:2 or 1:3. All right, very simple. Look at it again. This is high, right? This is low, this is high, this is low. We have another break here. You can see this is a break, right? What do? You sell, you sell, you put your, like I said, you continue to sell until when you see another signal for a buy. And what happens? That's the this is the third signal now, right? You can see this is the third signal, right? And price drop. Okay, when price drop, what happens? You have high, you have a low, this is a high, this is a low, this high wasn't taken out, you have a low here, so we didn't have up to two structure here. Okay, so you just continue to sell, you continue to sell. Okay, fine, we have a good structure here. We have a high, a low, a high, a low, a high, a low, a high, and then this low was taken out. A high, a low, this low was taken out. Sorry, this low was taken out. And what do? You sell at the close of this candle. You sell and then stop loss above this high here. You do 1:2. Okay, and then you wait again until the signal gave us for what? A sell. So we continue to sell until when we see the buy signal. Here we have high, low, high, low, high, low. We have high. Okay, so this is the last low. This is the last low that we have in the market here. Yeah, you sell, stop loss there, 1:2. Before price came up here, you've already captured your 1:2. All right, and the price even came to the downside. And here again, we have high, low, high, low, high, low. Okay, and then you can draw. This is the last low. This is the last low. Can you see? This is the last low. What happens after this candle close? You sell, stop loss above here. Do 1:2 and 1:3, you're out of the market. Look at it again. High, low, high, low. What happens? You draw, change of character, you sell, stop loss above. Can you see that? But you have to wait, right, for the indicator to give you direction. Look at it here again. This is a break. Can you see that? You sell after this candle finishes, closes above your 1:2 or 1:3, and you're out of the market. So that's how to do it. All right, you keep selling, you keep selling. So now let me show you example for buy. Let me show you example for buy. Probably we'll do two example for buy, or let's do the signal that is not successful. Okay, Let's do the signal that is not successful. Um, let's do two. This is a sell. This is a buy. So, hmm, excuse me. Okay. So we are not going to buy directly, right? Look at it here. We have high, low, high, low, high, low, high, low. Price is coming to the downside, forming structure. Yeah. High, low. This is what? High, low. This is where we have, look at it, the change. Can you see that? What do? You buy when this candle closes, your stop loss here. This will give you 1:1. You're out of the market. Okay. So we continue to have low, high, low like that, right? Until when we have another one here, look at it. This is a low, this is a high, drop to the downside, high, low. And then what do? When this closes, when this black candle closes, you buy, stop loss here. Can you see that? Can you see that? And then this is where we now stop buying because we now have a signal for sell. Do you understand the point now? So we'll now start selling. Okay, we'll start selling. All we have to do is to get the structure. Look at it: high, low, high, low, high, low, high, low. What do? You place your entry for a sell here, stop loss above here. Price come down, push up a bit, then drop to the downside. Okay, so very, very simple. So at this point we are still selling, right? We are still selling. Okay, we are still selling. We have a structure here. This is high, low, high, low, high, low. Can you see that? Okay, you sell here, stop loss above here, price push to the downside. Very, very simple. Very, very simple. Okay, let's look at this. We have high, low, high, low, high, low. You see? You see that we have a change of character here. You sell, put your stop loss above, price drop to the downside. Okay, so that is how to do it. Very, very simple. Like if you do 1 to 1, 100% accuracy easily, you can get as many signals as possible. You can see the amount of signals that we are getting, right? So that's it.